Welcome to Founders Unplugged, hosted by Greg McCallum. Long-form, honest conversations with founders and entrepreneurs from around the world.
Great to be here. I'm Gareth Hawkins. I wear a number of hats, but the biggest hat at the moment is as co-founder of BizCrunch, which is a platform for improving tools and resources for entrepreneurship through acquisition, which we'll come on to a bit later. Circuitous route to get here. Here I am in my mid-40s. I spent 20 odd years in industry, doing the hard miles in the metal fabrication sector, initially in various sales roles, and then climbed the greasy pole, ended up as a sales director. And at that point realized that trying to drive growth in a mature market and chuck on double digits a year is organically no mean feat, fairly impossible. So you have to acquire your way to some fast growth. So I learned at a fairly tender age that M&A was the way to do value creation. And so without knowing it, effectively did a roll-up where we were buying mature companies off of retiring owners that didn't really have internal succession. And we accreted a lot of value, improved our own multiple, and then eventually sold that company. I was, by that point, MD, had been for about 7 years, sold that to private equity in 2019. So I was on the other side of the table for a change, which was an interesting experience. And then from there, I had a brief earn-out, and I stayed with the company because by this point we were hitting COVID. So I stayed to kind of see through that era, which I'm pretty sure gave me the PTSD that I joke about it, but I'm fairly sure it was undiagnosed PTSD by the time I left. Beginning of 2021, I was a free agent. My son had been born. So my wife and I were married 17 odd years before Grayson came along. And so it was an absolute privilege to be able to spend some time with him. But being a wandering soul, I ended up wanting to get involved in lots of different things. So found my way through angel investing, actually, into the early stage space, which we can get onto that, and you know it well. But navigating that has been an interesting learning journey. We're in an interesting market. I don't mean just the macro. I mean where we are in the geography of the venture space. There's a lot of sketchy shit that goes on here, isn't there?
Yeah,
so
for sure.
We can get onto that, but I mean, man. So anyway, yeah, I naively worked my way through some early angel investments, and then started to get a bit more savvy about that. And over time, I've accrued a portfolio of about 32 companies, some of which seem destined for great things, some of which have crashed and burned, but them's the breaks. And through there, I was very lucky to find my way into Block Dojo, where the team there were looking for an investment director who understood how to structure investment rounds and how to oversee portfolio companies to raising money. And so I've spent the last couple of years working with that team in a consulting capacity as they've knocked out 8 cohorts in the UK, 2 cohorts in the Philippines. And that's been super fun, sort of being shoulder to shoulder with founders as they kind of bring their ideas into the world, take them out there, learn through the hard knocks that life's a bit shit and everybody's out to get you. And then come out the other side often with a sort of rejuvenated spring in their step and some money under their belt to go and take on the world. So, yeah, that's been lovely. So I've been really privileged to see things from 4 different aspects, really, as an acquirer, as a seller, as an investor, and then as a sort of an investment Sherpa alongside founders that are going out there to raise some money.
I like that.
Yeah, I just came up with that, but I'm now going to go and trademark it.
Yeah, I would change that on your LinkedIn, to be honest.
Investment Sherpa.
Yeah. I think that's
not sure I really want that job. I mean, of all of it, that's probably the most thankless.
Yeah, I suppose. Yeah. So a very broad ranging, like you said, 4 really interesting perspectives on the landscape. But I'm
Yeah, I'm curious. Normally I sort of try and start from the beginning and work our way up, but I'm going to do it the other way around today. I'm curious to know a bit more about BizCrunch. So that's been, you've been running BizCrunch now for a year and a bit. So what's involved there? Tell me more about that, because I think that's a super interesting side of things that most founders don't often hear much about.
Yeah, you're absolutely right. They don't. They're almost denied access to the knowledge that it even exists as a space, which is the first travesty of many that I'll go on to sort of evangelize about. But so, I mean, I had a world of choice as to where I wanted to put my efforts, and I, having done M&A on both sides and spent a lot of money with lawyers and who have all delivered great results, by the way, but have taken time and lots of investment to get to those results. I realized that it's not a very well optimized space. But if you look over the pond at the US, there's been this movement called entrepreneurship through acquisition that has been going since the 80s and has really gained massive traction as a means by which small and medium businesses, mom and pop, boring businesses, if you will, like traditional businesses, can garner some succession through external acquirers when they haven't got like an obvious successor within the business. Because all too often in these developed markets, particularly with the baby boomer generation and this silver tsunami that's coming, they've built these businesses that are doing some fantastic wealth generation, but they've got no means to pass the baton to the next in line, because there isn't necessarily an obvious candidate in the company. There isn't a family member that wants to take it on. So they have to look outside their walls, if you like. And the infrastructure for that has been, it mirrors the venture space. There's some sketchy shit that goes on there too. And there's some real opportunism and some failing, if you like, where, it seems to be quite self-serving on the side of brokers, for example, where there's a plethora of those, very few of which really deliver results. And so this movement that started in the States has not really been able, because the conditions haven't aligned until very, very recently, it hasn't really been able to gain any traction in the UK.
What conditions are those?
Sorry, mate.
What conditions are those?
So business school education is one.
Right.
So the whole ETA movement started at Harvard Business School back in 1984 and has been promoted as an elective, if you like, within business schools to budding young ambitious finance graduates that might be looking at what they do post education. Do they go and work in a private equity firm or work in the city? Do they go 0 to 1 and start their own venture? Well, there is a fourth option, and actually you could go and buy an established company, fairly highly leveraged acquisition, so you don't need to put a great deal of your own money down at the beginning, and take that company forward where someone's already done all the heavy lifting to get it to a point where it's proven product market fit and it's got to break even and it's cash generative and it's got a team and it's got a brand identity. All that stuff that millions of founders in the Western world are busily out there trying to move that ball uphill from that rock uphill. So the fact that it was promoted in business schools really galvanized a movement, and the whole concept of this search fund was born. So a search fund is effectively like a holding company that's capitalized by investors that then goes off and buys outright these smaller companies, aggregates them, and then either holds them permanently and just lives off the dividends and the earnings that come from it, which is, totally admirable thing to do, or flips them, because there is this whole valuation arbitrage game to be played where you buy small companies at a small multiple of earnings, you put them all together into a big holdco and you sell that at a significantly more multiple of combined earnings. So there's a lovely spread in the middle to be made. And the economics and the dynamics of that have kind of been eclipsed in the UK by the whole venture scene. It's what the private equity alchemists at the top end, north of 5 million EBITDA companies, that's what they're doing. That's their model. But it hasn't trickled down, it hasn't waterfalled down into the SMB space really, in the same way as it has in the US. where
Right.
you've got business school graduates through to through to veterans leaving the army, who are going into these kind of learning programs. The biggest catalyst that they all take advantage of, because it's there, is the Small Business Administration in the States, the SBA, because that offers like 90% LTV, loan to value loans, underwrites like 75% of them with government guarantee. So requires very little of the acquirer's personal guarantee or even personal cash in a number of cases, because they're using a combination of that plus what you would call deferred consideration here, what they call seller finance in the States, where the companies that are selling are happy to wait to get paid a small amount, like 20, 30, 40% of the ticket to sell the company. So they'll wait over a couple of years. So that offsets the other side of the LTV. So you've got, underwritten government-backed loan doing 70% of it, 30% of it fronted by the guy that's selling up to you. And you just got to go in, take the reins, make sure it continues to pay EBITDA or deliver earnings so that you can pay off the debt on those two parties. And then you're in clover, because all the earnings that henceforth thereafter are yours.
So we don't have an equivalent of that in the UK.
We haven't had an equivalent. No, we haven't for years, until 1st of July this year, when something called the Growth Guarantee Scheme was launched by the British Business Bank.
Okay.
And that is a not to the same extent LTV and government underwritten. The British Business Bank do guarantee the loan, so the lenders can lend comfortably, knowing that if the borrower defaults, the government will pick up the lion's share of the outstanding quantum. But it is really interesting that it's taken 40 years for the UK to find itself an equivalent vehicle. But we thought, myself and my co-founders thought, that was going to be a real galvanizing catalyst to make SMB M&A like more prevalent in the UK. But it was still that was only part of the story, because finding companies to buy is really tough. The process of negotiating and then administering the transaction is time consuming and costly. So we set out with BizCrunch to basically try and fix a lot of that. So the first product that we launched was a kind of data product for buyers, to enable them to very quickly identify potential candidate companies to go off and acquire. Because I think the biggest limiting factor for people taking their first step in ETA is, where do I find the companies? Because you can look on Companies House, and Companies House shows you a very limited amount of information, filleted balance sheets for companies doing less than 10 million revenue in the UK. You don't have to file any P&L. So you're looking at the balance sheet, and like, is this a profitable company? Is this a material revenue company? I don't know. So what we've done with BizCrunch is we've kind of reverse engineered the balance sheets to deliver estimated P&Ls. So now you can search across all of these unlisted companies, private companies that don't file a P&L, and get an idea of which ones are doing the sort of size of revenue and earnings that you want to buy into. So we then looked at the ownership structure. We've identified who owns these companies, how to contact them, which is also a massive time consumer. People, searchers as they're called in ETA, were spending weeks trying to find 2 or 3 candidates to reach out to. And then you've got to put together your campaign to outreach, multi-channel, to try and get some conversation going. And you've got to screen them and make sure that actually what you thought is what is real, what is actually the case, and the seller wants to sell. So there's a whole process to go through before you can even really make an offer. And we're trying to basically fold time and take what takes weeks, months, and put it into minutes, days. Minutes for the search, days for the conversation and negotiation. And the end game is to work with much more accelerated M&A legals, so that really you can be agreeing a deal and closing it within 4 weeks.
And doing that ideally through the platform, presumably.
Yeah, I mean, I don't think we want world domination. Sorry, VCs. But we do want to be able to make a dent in the world and help this process on. There's a few folks that are trying to solve some of this problem, because fundamentally in the UK, the silver tsunami means we've got about 300,000 companies that need to sell, and under 2,000 SMBs every year change hands. So, we've got 100 years of deal flow, 100 years of of conversion at current rates, which is mental, right? When we've really got a 10-year window in which these companies need to be handed over.
Yeah.
Otherwise, they go into members' voluntary liquidation. The folks that work for them are all out of a job. The corporation tax that's generated for the exchequer vanishes. I think it's been quantified that if we don't fix this problem, there's £160 billion a year impact to the UK economy, just in terms of loss of fiscal income to the Treasury, welfare costs for these people that are out of work if they don't find another. So it's a massive problem. You've got Rachel Reeves, in the recent weeks, saying, the Tories have left us a 20 billion black hole. Well, look, there's 160 billion a year black hole coming if you don't do something about it.
Right. But I'm just thinking out loud, really, which is the whole point of the show. An excuse for me to think out loud.
Me too. Did you notice?
Yeah. But it's interesting because I would assume that in a vast majority of those cases, like you say, if individuals pass away, business owners pass away, and there's not anyone that's sort of been planned to take over, that it would usually default to a family member through the will, and then actually it's on the family member or a relative there to have to find a buyer, right? More often than not. Is that
more often
usually
not, they liquidate? The liquidation value is what they. No, they. I mean, no one wants to buy a company that doesn't have a clear leadership or a clear path to. So,
right.
If you have to bring your own leadership if you're going to be buying it yourself. Absolutely, that's what ETA is. But if it's been neglected and left, and the owner has sort of died in service, makes it actually a lot more difficult to sell as a going concern.
Right.
So what unfortunately tends to more frequently happen is the inheriting family wind it up and liquidate the assets, which is a travesty because obviously people lose their jobs. So sometimes that by default,
a very impactful and successful business for a community or for the country, right?
Absolutely. Yeah. So, I mean, it's incumbent on business owners ultimately to succession plan, but who does when, they're in the trenches fighting the good fight? We don't, as a society, we don't really plan for the worst case outcome, do we? I mean, you look at it with...
Hi, a friendly reminder to share this episode with your network, like and subscribe. And if you are feeling really supportive, please consider reviewing the show on the podcast platform of your choice. It all really helps support what we do. Thank you. Now back to the show.
Percentage of society that's got a will or has, got a pension that's going to pay them enough when they retire. And it's, we're quite short-termist, unfortunately. But, when you've got the lives of others, you're probably needing to think, okay, what's my succession plan for business continuity? But, we're not mandated to. There was a survey done pre-pandemic which found that 28% of SMB owners didn't have a succession plan, and their option was just to sell. So they were actively considering selling their companies.
Right.
Post-pandemic, there was a similar survey done by Shawbrook Bank and the National Association of Commercial Finance Brokers, and they found that the number was 40%. 40% of SMB owners are considering selling their company. But then within that 40%, 72% haven't got anybody internally to sell it to. They have to sell it to someone externally. There's no obvious candidate to do an MBO. It needs to be an MBI, a management buy-in, where like the whole entrepreneurship through acquisition movement is. And are there enough buyers? If the UK is turning out business school graduates and saying, hey, entrepreneurship is startups, that's the only thing that you can contemplate coming out of business school is go and be a startup, then we're sort of failing everybody on that front because that's a hard road for the entrepreneur to go, and it doesn't solve the succession problem.
Yeah, and you mentioned about that earlier, that in the States, that's something that they've been informing graduates of for a long time. So is that something they're still not doing in the UK, or is that now creeping in?
Just about creeping in. The last 18 months, you can now do an elective at Cambridge Judge Business School. You can do one at Oxford Said, Henley Business School have got an offering there. Warwick. The MBA program has an elective, I think, around entrepreneurship through acquisition. LBS, I think, London Business School, were probably the first in the UK to really devote some time and oxygen to this and actually put together a clear set of collateral around it. So they have a whole entrepreneur society that is entrepreneur through acquisition society at LBS.
Oh, right, okay.
So it is starting to grow as a movement, but it has been glacially slow for 40 years, and now all at once.
It's super interesting. I mean, is that something that as well? I mean, am I right in assuming then that really until, like you say, the 1st of July, when this new loan scheme has come into effect in the UK, the assumption would always be that for to enter into the space of entrepreneurship by acquisition, you would have to have a significant amount of capital behind you in the first place to really take part in that ecosystem. But for now, that's
so
making it a little bit more
funds,
democratized, at least.
100%. Yeah, it is democratizing. It is leveling the playing field. It is giving us something approaching the amazing catalyst that they have in the state.
Right.
So now you can actually contemplate buying companies with a lot of leverage in the UK, obviously providing that they are generating enough earnings. But some of these banks, particularly some of the challenger banks that are focused around business, are offering now these kind of facilities aligned with the growth guarantee scheme that will lend at sort of 3-4 times EBITDA. So it gives you effectively 3-4 years to repay based on just all of the earnings from the company. I mean, you would probably not want to put all your earnings into repayment of debt, but there you are. So the facilities are starting to emerge now where you can do it through leverage rather than have to go and raise a search fund. But so in the States, the search fund model, where for larger acquisitions of SMBs, entrepreneurs are going out and they're raising equity finance in the same way that you would for a startup, and they're giving up 40% of their cap table to investors coming in and capitalizing the venture. So it's 450 odd of those search funds in the States, and they use some of the SBA facilities as well, but they then don't maybe use as much seller finance because they've got equity finance.
Is it assumed, though, that the individual themselves also is expected to contribute their own capital to?
Correct.
Also, right?
Yeah. So think of that like VC, where the GPs have to commit and participate. Well, same principle in the search funds. So you'll bring some capital, you'll supercharge that with equity finance from search fund investors. Normally, family offices typically are getting involved in that because it's been one of those. It requires patient capital, right? Because it's an illiquid asset class. So you're not going to get returns within 2 years. It's patient capital. You have to have the appetite to wait probably 5 years for a return or be comfortable living off the dividends. So the search funds typically are, because they're mini PE, they are talking about kind of 5 to 7 year horizon, flipping the entity. That's where the holdco thing is going, where you buy lots of little ones, you put them together, and then you flip that either to a listed company that's happy to buy, an aggregated entity to push up their price to earnings ratio and push up their enterprise value, or you're going to sell it to a mid-market private equity company that's like, okay, good, you've done the hard work for us. You've got this from being a smorgasbord of small companies to being something that looks like it's, making a material impact. So, we'll buy that off you now at sort of like 6 to 8x earnings. And you've probably picked up all those little ones for, in the States, it's like 3 to 5. Here, it's 2. So you'd be paying 2x earnings, 2 years earn out, if you like, to buy the company in the UK. And you could be selling it to mid-market PE at 6 to 8x. If you're lucky enough to sell it to a listed company, it might be 10 to 15x, right? So there's a huge upside if you do it right. And those search funds in the States have been following that model for 40 years. Nova Capital was the first one that came out in '84, and it delivered a 24x return over 10 years. So that was proof of the model. I think the IRR typically is in the mid-20s to early 30s. So it's a nice generator of wealth if you're happy to stay in long enough. But I mean, 450 of them in the States, 20 in the UK, right? So normally the UK is 5x smaller than the US in financial instruments. That's 20x smaller in the UK. So something's broken, right? We just haven't embraced that asset class to the same extent as they do in the States. But it's changing, and you've now got family offices over here starting to switch on to it and going, well, where can I invest in this search fund model? So it's a really viable opportunity. And if you were sourcing your companies that you wanted to acquire through BizCrunch, well, we've taken the 5.7 million incorporated entities that live on Companies House, and we've assessed them all, and we've come up with about 500,000 on our database that are independently owned, doing 1 million plus, profitable, probably acquirable is what we believe at, with the right deal at the right time.
That's amazing. I mean, I mean, this is why I love doing this show, because I learn so much from my guests. But and I think that's why people like listening to it. And so on that note, like what can you, or what can be done? I mean, I'm assuming this is what your part of your mission is, and part of your motivation for chatting with me as well is to kind of spread this message. But what else can be done to maybe spread the message of encouraging people to get involved into this particular space, especially, like you say, the young graduates maybe looking at something to get their teeth stuck into, or maybe those with a bit of cash and looking to expand their portfolio, and like you say, maybe venture into a different asset class. What can we do to really light the fire there?
So we are not the lone voice, thankfully, in this space. There are a number of savvy folks that have either come across from the States and have done this and are now evangelizing about it here,
right?
Or there are some homegrown, proven ETA searchers that now want to pass on, the knowledge and pay it forward, if you will, to swell the movement. So there are a couple of accelerator programs that you can join to learn in a kind of an intensive fashion. There's the Buy and Build Academy, I think, which Paul Quirk runs. There's Novastone Capital out of Switzerland, which sort of is trying to raise the awareness of this in the whole of Europe, basically. But so it is increasing in volume, but very, very slowly. It has been incumbent on the business schools, but it is then incumbent on the movement, if you like, to kind of perpetuate the awareness and give people space to discuss it. So at BizCrunch, we have a community side where folks can come and they can trade insights, war stories, deals, you can co-invest, participate. So I think creating these spaces in which people can discuss and compare and learn and get stuck in. There is a lot of, what I found is there's a lot of collaborative spirit in ETA. There's lots of people that are so willing to share, and it's kind of similar to some extent as the founder community in the sort of startup space, right?
Yeah, or like the angel space, things like that, right? Yeah, exactly.
Like with people that have a sort of common interest, if you like, or a shared mission, they're willing to share their experience and their playbook, and that's lovely. That long may that continue. It would be sad if, like in the VC space, it became much more kind of parochial and coveted and, walled garden, and you weren't able to learn together. So we are at a lovely time in this movement where everybody's finding their way and willing to pay it forward, which is great.
That's good. How does sort of businesses in distress, turnaround, that kind of thing factor into this landscape? Does it at all, or is that really sort of fairly truncated?
No, great question. And there you can have a great opportunity buying companies that are about to enter administration. It's a way of getting in cheaply, although like a lot of things, all the glitters, it might seem cheap going in, but it's probably going to require...
There's usually some reasons why it's in distress, right?
It'll frickin' age you. It will age you. I mean, I bought a company out of administration, and yes, probably the hardest I've ever worked,
right.
Frankly. Because
what sort of company
you've got... is it an industrial electronics manufacturing company?
Oh, right, okay.
Yeah, up in the northeast of England, and wonderful team. I bought it for the team. The team were incredible. The brand was 40 odd years old, well known overseas in the sort of high end, high integrity space of the metal fabrication industry. I mean, glorious turnaround story, but it was going into administration at the time that I acquired it. And yes, you have to act very quickly to put a tourniquet around the business, stop it bleeding. You've got to restore the faith of the people because they've been through the ringer by that point. It's not the same as acquiring a going concern where everything is the same except you've got a new owner with
right.
There's a real repair job to do with administration. There are companies that are not quite at that stage. They're still a going concern, but they've been neglected. And maybe those are the turnaround jobs that are perhaps more exciting and more rewarding in the shorter term, because they only need a little bit of maybe digital transformation or marketing or, injection of new strategy in order to really galvanize them and turn them around. So there's plenty of those in amongst the 500,000 on the database at BizCrunch, plenty of those that look to have just reached a point where, it's comfortable and they've not been encouraged to push outside their comfort zone. And, huge upside if you can take that established machinery and just crank the handle a bit faster and do some sensible stuff on, what a wonderful time we're living in with AI backend automation and, Zapier process flow automation and stuff. Think of all of the human capital that goes into doing repetitive tasks that actually you could, optimize and improve and give those people something more exciting to do within the company whilst you're improving your bottom line and making your company more efficient. So there's loads of great stuff you can do within trading companies that are just running out of puff, and you can inject that new oxygen without having to go and wade through the minefield of a business administration. But there are folks with bigger stones than me that are doing this all day, every day, buying companies out of administration, normally because they want the assets. They don't necessarily want the going concern. They want the assets. And that's cool. To the victor, the spoils and all that. But yes, we have a section of BizCrunch where you can actually search for businesses that have entered administration or, where receivers have been appointed or whatever. Not for the faint-hearted. There's such a supply of companies that are okay and just need new blood. That's where I'd put my gun sights first. We're not you have to look at this from a position of abundance, right? There are hundreds of thousands of UK businesses that need to sell on. And
it just depends on your appetite and your skill set, right? And maybe your access to skill. Because, the reason why I was asking as well was quite a selfish reason. When the first ever business, a proper business, I would say, I had a couple before, but the first proper business I ran was in consultancy, but it was in hospitality. And a lot of my work was in, initially just kind of like small amounts of change management, but usually, not for businesses necessarily in distress, but just for improvement, right? Streamlining, that kind of thing, training, etc. And then sort of the latter part of that sort of stage in my career, I guess, and that business, I was working more with those acquiring specifically businesses in distress and for turnaround and all that. And they were asking me to come in and assist with that. And you're right, it was a really interesting mix, but and one of the reasons why I decided to pull a bit out of it was largely because it started going into a whole range of different industries that I was pretty unfamiliar with at the time. But it was great because it really exposed me to a lot of new industries, because of a lot of the principles were basically the same. So, someone would say, hey, you helped me, with that hotel that we turn around. Now I bought this factory, can you employ some of the similar things? I was like, yeah, I mean, the principles are pretty much the same. It's, etc. But one of the things that I noticed as well was more and more of the people I was working with, like you said, were buying it really not so much for the business itself and for the longevity of that, but more for the asset flip side of things. And that's where I was starting to get a little bit oh, okay, so I'm here just to save face. There's not really an enormous amount of intention for me to succeed here. But it was still massively interesting.
The illusion of trying to improve the prospects of the company.
Yeah. But it's still massively interesting, especially when it works, and an incredibly satisfying thing to do. But it's bloody hard. And at the time as well, I was really young. So, this is in my early 20s. So trying to take, some of these companies that have, been around for, like you say, 20, 30, 40 years, staff that have been there pretty much all that time. And there's this 20-year-old kid coming in who's starting to say, oh, we should do this, we should do that. It's, it's daunting. And I remember, the first couple of times it didn't work too well, I can tell you, but then you learn how to approach it differently. It's tough, but yeah, it's hugely fascinating.
Kudos to you for trying again, for keeping on iterating and innovating and bringing new ideas to the table. I think that's super important. I mean, it's testament to the people you were working with too, that they wanted to give you that opportunity to do that. Like, they valued your input. That's amazing. I mean, too many companies don't value the input of young, intelligent, capable, ambitious people. And I think in order to rejuvenate companies and drive the longevity of them, you need to bring in those that new blood, that new skills. I mean, I'm a big proponent of that. And at BizCrunch, we've brought in several folks that are like recent graduates that are, brimming with ideas. They're tech native. They look at things with a really analytical, innovative eye. If you don't embrace that, you can miss the opportunity, right? Because there's very few ideas are unique, and they, as I've seen from the incubator side, like they could become a bit of a commodity. The actual the differentiating factor is the strategy that you use to implement those ideas and how you gain a bridgehead, how you gain market share, get to that product market fit before other people. That's the challenge, and you need that takes a village.
Yeah, for sure. I think one of the things I recognized early on in that part of my career, which served me well, is first off, I had originally studied sociology, and so the understanding of individuals working together and in groups, group psychology and sociology is incredibly fascinating for me. And there was something within that I learned very early on, and from practically doing it as well, and not paying attention to this, which was that people tend to, first of all, when it comes to wanting to change something, we automatically look at things without the context of why it is being done in the way it's being done in the first place. So that's an incredibly important thing to bear in mind, that while we may know, oh, well, I learned in business school that this is how you do it, that doesn't necessarily apply to that particular situation. There's 20, 30, 40 years worth of context behind why it might be being done that way. And you need to find that context out first before throwing your weight around. But then the second part of that is no one respects anyone who's not willing to do the thing that you tell people how to do. Like that's common sense, right? It's absolutely common sense. But in group think, in group psychology, that like really plays out like in a big way. That when you have a leader that's again and again sort of telling people, right, I want you to go and do this, I want you to go and do that, unless they see at least occasionally that person demonstrating that they are able to do that thing, they're eventually, if it's someone telling a tree surgeon how to cut down trees, like unless that person actually picks up the chainsaw every now and then and chops one down and demonstrates, oh yeah, they're actually shit hot at it, that eventually over time the resentment grows and people start to go, does he even know how to do that? Why is he telling us how to do it? So there's some very basic things there which I think actually do translate over into what you were just saying too, which is the success of a company. There's only successful leaders, and those that actually can turn organizations into successful ventures need to be able to demonstratively execute every now and then the thing that they're proposing for their team to do for them. Like there's only so much bullshit 100%. You can talk. Eventually it's got to walk, right?
Oh yeah.
If you are enjoying this episode and want to support the show, please subscribe with notifications turned on, and let us know your thoughts and opinions in the comments below. This lets YouTube know we are doing something right. Back to the show.
Yeah, and there's lots of stories of business school graduates that have been given by the book, if you will, the playbook, and then have gone and learnt the hard way that the actual human piece is the biggest challenge in any business that you end up taking on to lead. Well, all businesses are people, all right?
Yeah.
Until we reach that Sam Altman utopia of the unicorn solopreneur that's powered by AI, which I think is a more dystopia in my view. But then I'm not sure Altman and I would agree on much. He's proposed that that's the future. Puts the fear of Christ into me, because why should that be the future? Businesses are people. And, the reason that we have employment isn't necessarily just for shareholder value. It's for a common mission, a common cause. It's to be able to share the fruits of the gains. And business came out through necessity of the kind of shared enterprise of a collective of people that were needed in order to move the dial to achieve the mission, right? So how can that be distilled to just being one person accruing all the gains and using all the tech? I mean, that's kind of an anathema to what business should be. business should be for all, and all should be able to share the gains in some way. Yes, not everybody's going to be a shareholder, but if the company is successful as a consequence of the efforts of all of its people, it should be able to pay more wage, but offer better benefits. So that is the business dream that really we don't want to let die. And so there is kind of like this moral mission, if you will, to go in and take the troops that have been there within the business with you to make their lives better from your impact on owning and leading that business. But there is going to be an inherent suspicion, cynicism, trepidation, whatever, amongst those folks that, because people don't like change inherently. We need to see the benefit of that change before we buy into it. Some folks are more willing to trust than others. But the biggest challenge I've ever faced, and the thing I've always wanted to get ahead of and try and prove through authenticity that, it's meant and it's going to be a collective benefit, is the people piece. Because if you don't have the hearts and minds, you don't have a business. No matter how strong the brand, how good the product, how great the underlying unit economics, if no one is going to support you in doing it, you're buggered.
Yeah. Have you, really random question, have you seen the TV show The Bear?
Do you know I have?
You should watch it. I've started watching it. I'm on season 3 now. It is about a young Michelin star chef who finds out that his brother committed suicide back home in Chicago, and he owns a restaurant, one of these sort of sandwich places, basically, sloppy, beef sandwiches kind of thing. And he was given it by his brother. So he then has to come home, and he's now got this fucking restaurant that he's got to somehow, manage. But it's obviously a very different type of restaurant, and it goes from there. And it's everything we're talking about. It's fiction. Yeah. It's incredible. It is probably, I think, the best depiction of that I've seen so far. First of all, in what the kitchen environment looks like, because that was one of the very first things I did in my life, was go in the kitchen and study cuisine in France, and but then I quit because it's an incredibly stressful thing and was killing my passion for cooking, to be completely honest. But it really beautifully demonstrates the struggles with change management, the things you were just saying there about demonstrating passion and others being inspired by that passion and following you along, but also how incredibly destructive sometimes passion can be, but also how rewarding it can be, and the sort of duality of that. And it's a really great show. I'm a bit of a nerd, so I will always recommend TV shows to people I speak with and movies and books and stuff like that. But I highly recommend it. It is a bit edge of your seat at times, like, as long as you can stand that.
Right, I've just added it to my Disney Plus playlist while we've been talking here. So,
100% do it.
I'll check that out. Make a change from watching Masha and the Bear with a 4-year-old, frankly. So.
Yeah, don't watch this one with a 4-year-old. I don't think they'll approve of the incessant swearing.
Age appropriate. No,
but
I mean, the kitchen environment, I guess, is probably one of the areas of business that don't really correlate with what I just proposed. Like, there is. Right. I mean, maybe you can tell me if it's all just dramatized, the whole kind of Gordon Ramsay approach to, yes, chef. The whole kind of like autocracy of running a kitchen on fear and respect. Is that a thing?
It is, but not for the reasons that I think people think. It's not fear. It is respect, and it is passion. And it's also, there's a military element to it as well. So it's about. I mean, if you watch the show, I think it gives a good good insight into that, actually. But yeah, if you're not from that world, from the outside looking in, it does seem like it's all motivated for the wrong reasons, but it's really not. It's about really just creating an incredibly well-oiled machine. There isn't as much sort of narcissism. Maybe there is some, but there isn't as much as I think that sometimes is portrayed, like you say, like the Ramsays of the world and so on. Maybe not as much, but there is definitely a lot. Yeah, there's the egos, but it's not as abusive. Let's just say.
Yeah. Is there as much opportunity for progression within a kitchen workforce as you'd like to think there is within other industries? I'm a big believer in the whole kind of good managers make new managers, right? So you want to develop your team, make yourself redundant, enable yourself to be free to go on to the next thing, and not covet and protect your workload just so you're doing busy work. Like, I'm a big fan of let's develop the skills of your team, pay it forward, reach down, pull them up.
Right. Find
does
a
that
new
happen
talent,
in
find the
kitchens?
fresh blood. 100%.
Yeah.
But, yeah, absolutely. But the thing is, the kitchen is just like anywhere else. It still is full of people with egos, just like every other industry. Like what you said there is a very rare thing, I think, philosophy to have, or at least if people say that they have it, in reality, their ego gets in the way of that. Like, we have to be honest about that. That yeah, I think that a lot of people would like to think that that's the way they approach things, but in reality that they don't, because they're scared of, losing their post, whatever it might be. But yeah, absolutely. It exists in all industries, and that is no exception. But the difference is it depends on the level where you are, right? Just like with everything. And in the kitchen space, that you've got these different levels. And in the highest of levels, when you start talking Michelin star areas, you have to be amazing to even get a look in. And sometimes that means 3 years washing dishes before you even get a chance to peel a carrot, right? It's like, and then when you peel that carrot, you better peel it in the most amazing fucking way that you've ever peeled a carrot, and you need to do that repeatedly for another 3 years. It's just about opportunity, and just like with anything, being in the right time, the right place, working hard, being consistent. It's the same with any other industry, really, when we think about it, especially when you start getting on the absolute top levels of things within those industries. Because there's a lot at stake when you start getting to those levels, right?
And I guess there's a real tangible opportunity to demonstrate, like, visually and taste-wise and stuff, I guess, the quality of the work that you're producing. So there's not really anywhere to hide in a kitchen, is there? Like, you're either doing a great job and contributing to providing this wonderful product, or you're holding back the team. So I guess it's laid raw to avoid any more kitchen analogies.
Yeah, and which is why things are run in the sort of military position that they are at the higher ends of this space. And again, like in a lot of other industries, because like you say, if you're not able to function as part of the team at that higher level in a consistent rate, then of course you're not going to be able to lead the team. So it's like you need to be, in order to be a good leader, as you also need to be a good follower. Because a good leader leads from, doesn't always lead from the front. Yeah, it's an interesting. I think the kitchen is a really interesting space. I moved away from that many years ago, but over more recent years, I find myself coming back to it more and more from a analytical perspective to kind of assess, almost like as an allegory for the startup ecosystem. It's really interesting, especially as you've got such a huge variety within that space alone of different levels of quality and expectations and all of that. And I'm pretty certain that what I learned in that my time there has paid dividends for where I am now, especially in terms of paying attention to detail, teamwork, all that kind of stuff. Like it's super interesting.
Well, especially if you were looking at it through a sociological lens. I mean, if you've got that natural leaning to work out how humanity is wired and how it functions as a group and all that kind of stuff. Yeah, I don't think you could have helped but see to have taken those learnings and intuited them. I went quite deep into the sort of exec coaching space when I wanted to sort of bring the best out of teams, and still do. And I found it hugely beneficial. And alongside the tried and true kind of like color wheel, MBTI, all the Carl Jungian stuff of psychology. I landed on a team, because it's very difficult to apply that in a team dynamic. Like, lots of these are individualized assessments of how people, one member of a team is wired, and that's fine. And, you can do the whole handbook for how to work with each other. But no one had really done an overarching kind of like team dynamic assessment and have a model for that. So when Patrick Lencioni, really great. So have you seen then the 6 types of working genius, the Pat Lencioni thing? It absolutely blew my mind. The whole, they distill it down to like there are 3 phases of teamwork. Where if you look at it in a project context, you've got the ideation stage, the activation stage, and then the implementation stage. And what we see a lot of in founders, and particularly ideation stage founders, is they're really good with the whole wonder and invention piece, where they're kind of coming up with these great ideas, and they're an ideas factory. Brilliant. But do they have that complete finisher, what Pat Lencioni calls tenacity, to get things over the line and actually finish the bloody job?
Right.
Often not so much. That's a rare combination of someone to
Mm.
span that entire spectrum and bring things home. And so what you normally need is a team dynamic where you've got a good mix of people that can do the wonder and invention piece, the discerning the wheat from the chaff, the bullshit from the actual stuff we should run with, the
Yeah.
galvanizing of a team and keeping them motivated. And then you've got, at the other end of the spectrum, you've got the enabler who is like, where are the problems that are going to hold us back from finishing this? Right, let me get rid of those for you. Let me unblock this for you. And then someone needs to just, be the last person carrying that baton, taking it over the line. Execution. Yeah, exactly. Yeah. So that looking at that kind of, well, have I got those folks in my team? Have I got that right mix? Or have I managed to just recruit everybody like me as a founder that is 100% ideation? If I'm doing the latter, bugger, I've just wasted a shitload of money because I don't actually have anybody that's going to do the work.
Right. Yeah. And look, this is a very good reason why most founders don't get funded. It's because it's almost impossible to find one individual with all of those qualities, right? To have someone that's able to do something actually from beginning to end. It's a very, very rare combination of personality traits. To have someone that can have that level of creativity, blue sky thinking, and then also, the attention to detail, the work ethic and everything to get it done, and then all the things in between. That's really rare. You usually find it's one or the other because of, one involves a huge amount of energy or a certain type of thinking. You need to have a pretty scatterbrain kind of approach and maybe, be a bit of a procrastinator to be sometimes really creative. And then you sometimes need to be really, really detail oriented and hyper focused to be an executor and not necessarily too creative. So the reason why most founders don't get funded is because of not the reasons the VCs say or the angels say, like we know, which I'm sure we'll get into, but because you identify that and you go, this person is a really creative thinker. That's great, but they don't have what it takes to bring it along, or they don't have the team to support them to do that, or vice versa. But in some cases it could be, okay, they have just about enough to get them to one level, but they're probably not going to be the founder or the CEO for long. Right. And that's another harsh truth too, is, not enough people, I don't think, realize that they need to make themselves redundant. Like back to your point about that earlier, it's like, actually this, maybe I am the founder and CEO for now, but I won't be even 3 years. And that's okay. I'm the ideas person, and I mean, we see that happen a lot.
Great founders don't always make great leaders.
Right.
And sometimes they have so much of that self-belief that makes them a good founder that they can will something into existence. They can keep pushing that rock uphill. They can, grind out a result, but they, as a consequence, have very little time or diplomacy for other people. And that also can be a bit of a limiting factor, because you create a one-person business that alienates more than it includes, and that's an issue. So you can see why, to your point, I mean, around needing to have a mix of skill set in the founding team, and a little bit of what I said. Like, you can see why accelerators are now pushing more and more for multi-founder teams, because I think when we are now in a position of scarcity, if you will, of VC funding, it's not being proliferated around everybody with an idea. It's actually being reserved for the 1% of the 1% of the 1% that can actually prove they might get to unicorn status. And that's cool. That's the natural kind of distillation of VC. That's probably where it should be, hopefully reducing that risk element, because it always baffled me about VC that it's 90% death rate, and that's okay. Apparently, we're supposed to just believe that you're going to find 10% of them that are going to be the winners, that are going to give us 3x what we invested.
To somehow believe that that's not going to have an enormously negative impact on the economy as well, which has always boggled my mind. But yeah.
But you can see why the world is coming to terms with the fact that actually there is a recipe for success, and accelerators are failing founders if they are not bringing to their attention that being a solo founder is bloody hard, and that you're not just the succession problem of, well, if you get hit by a bus, your business is bollocksed. You need to have someone else to carry that load with you for other reasons, like they will have a different skill set to you. They might be better with people than you. You might be able to, both achieve more in a day than you might as a solo founder. Because, to do all that stuff, you need to fold time, and that's impossible.
Yeah. The problem is always the same thing. It's in my perspective, it always comes down to the self-awareness problem. That's what it always comes down to. Like, because our egos exist. Everyone has one, and like, going back to what we were saying earlier about, kitchens and other industries and so on. Like that's always an issue, and it's very rare and unusual for someone to have the self-awareness enough to say, I am not good at that. People want to believe they can a lot of things, and it takes a lot of usually going through some pretty the big moments in your life for you to be able to come to terms realistically and look in the mirror properly, to be able to identify what you are actually good at and what you're not good at, and that's not easy. Most people spend most of their time thinking they're good at everything. It's not, well, that's why that interview question of, tell what are your strengths and what are your weaknesses is such an important question, and most people answer it terribly.
Yeah, well, they don't answer the weaknesses.
I don't have any weaknesses. It's like, oh right, okay.
Yeah. I always used to use that one. So you've made a really great point about humility, which got me thinking actually that humility isn't encouraged. Even though it's a massively necessary tool to have or trait to have in your character in order to be a good leader, actually it's not encouraged by investors. There is this, or there has been this trend to back confidence over competence. Like you can send a middle-aged white male bombastic alpha into a pitch, and he's more likely to come away with the investment than a much more competent, cerebral, humble, multicultural, multi-gender team that might actually be better qualified to tackle the problem and more deserving of the money. But because they were self-deprecating in the interview or didn't promise the world with no concern as to whether they could deliver it, they didn't come away with the check. And that fundamental imbalance is one of the root problems of the space, really. But it's not just venture; it's investment in general. We are, even with all the tech and all the analysis that we have, all the data that we have about what makes success, we're still hoodwinked by people that spin a good yarn.
Yeah, for sure. I mean, this is why I'm always banging the drum about, founder-led sales and the fact that founders, in my point of view, need to make sure that that's the number one skill that they are as up to date on as possible. And I always break it down in saying it's not some mythical art form, because that's the career path I went into for many years, following all of the other nonsense I did in like I mentioned before. It is just about being an excellent communicator and understanding the sort of psychology in sales and communication. That's all it is. It's not rocket science. And and the reason why I mentioned that in response to what you were saying is because of really what salespeople know is that when you don't know something, you can excellent salespeople anyway, not bullshit artists, but excellent salespeople will be very, very open about the things that they do not know, especially if you're the, say, account manager for a very technical solution. You've got a team of experts that's going to help you later in the sales cycle. Then you just defer. You say, look, I don't know that right now, but that doesn't mean you don't have confidence. So it's about riding a very fine line between, like you say, humility and confidence. It still gets the job done. It still inspires confidence in the people you're speaking to. It still makes them feel like they're in great hands. There is absolutely nothing wrong if you know how to do it correctly in admitting to the areas in which you're not great at, or you don't know, things like that. And I think that's it, with the example you just gave of those two founders, the two teams, the two businesses, that I think is a mistake that the second one makes, is that they don't quite know how to effectively communicate that while maintaining that level of confidence that inspires confidence in others, that sells that vision, while also admitting, we've got some things that we need to work on. And that's something that I think is lacking. And I think that just comes really just down to communication skills and public speaking skills and presentation skills and all that. It's not actually, it is a very micro change that actually should be made there that makes the world of difference, and I think it can do a lot. That's why I work with the clients I work with a lot to try and help that, because I think that actually that balance is the perfect balance, because if you get that right, it inspires more confidence than just the guy that comes in, being the bullshit artist. Because I think instinctively we always know there's something not quite right there.
I think we're in a post-sales world where people see snake oil salespeople coming.
100%.
Right. So as consumers, we're oversold to, and whilst the paradigm of persuasion has changed over the last kind of decade, actually we can smell a sales pitch coming, right? And maybe that's just cynical old middle-aged me, but I do feel 100%. That there's younger people are equally savvy about this. So how do you sell in this kind of climate? Well, you just be a good human. You deliver on your promises. You manage expectations well. You evangelize without bullshitting, and you convey exactly what positive impact it can have on the life of the person you want to use the product. And that's a fairly universal kind of toolkit to take into any business development kind of function now. Is like, well, you don't have to go out there and fleece people, right? Those days are gone. You don't have to go out there and pretend it's something that it isn't, because, with the rights that we all have now, and, consumer rights to send stuff back, but also in the business to business world, they're going to pay you if it turns out that what you sold them is a sack of crap. So you have to be absolutely genuine, authentic, upfront, be able to demonstrate that the product does what it's supposed to do, and just be a good human. Listen. And if, to your point, if you don't know the answer, it's okay not to bullshit your way through it. It's okay to say, really great point. I'm going to go find that out and come back to you.
I don't know. Saying I don't know is one of the hardest things for a human being to say, alongside the terms, I was wrong,
I'm
sorry. Exactly. Yeah. Well, look, we have now entered the halfway point. So, this is this is something that I do because of at this point, this is where the first part ends on for those that are listening or watching, and then they're gonna have to wait a couple of days to get the second part of our conversation. So,
dun, dun, dun.
Yeah, bit of a cliffhanger. This is where it will end.
Thank you for listening and/or watching. Subscribe with notifications turned on to get notified when part 2 comes out. While you wait, please join in the conversation in the comments below.